morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures. Today is an FOMC day. You've got the interest rate announcement at 2 p.m. Eastern Time. There is a press conference by Fed Chair Yellen at 2:30 p.m. So you're going to have the reaction to the interest rate announcement, and then you're going to have a secondary reaction to the press conference and any questions and answers that are given at that point. So you got to stay on your toes. I'll give you the same piece of advice I've been giving people for years. Don't game the Fed. Don't walk in at 155 and say, well, the reaction's going to be lower because X, or the reaction's going to be higher because Y, and take a position at 155 and then find yourself in big trouble come 205. Or do what most new traders do, which is do something like that, then have price go against them, dump it, only to have it go back the other way. Because typically what happens in that situation is if you're right, you'll cut the position pretty quickly because you're like, oh, I'm right. I can't believe it. And you get out. If you're wrong, then you tend to hold it waiting to be right. And you tend at that point just to become more wrong. So don't do that. As far as the chart goes, we've ended our lower band ride. The lows yesterday down at 56.25 were rejected. It was a nice bounce in the room off of the 56.5 lower level that we use. And it bounced within a couple of handles of our upper level, which was up at 71.25. So for the chat room, it was a really good day. Any day that's even if it's an inside day, if our lower level and our upper level become fades, that's fantastic. So right now I'm short. I just took some more off down at 60.25. I have a runner. Wasn't my best entry ever. I'm in at 66.25. I added at the upper level, but still fading those closes. It took a little longer to develop this time around, but fading those closes continues to work. So I'm going to let that work into the regular session. I still have my longs from 37. I've taken a lot of profit, but I have enough of a runner. And my plan there is if we get a positive reaction out of the Fed and we move up into the middle band here, up in the 84, 85 area, and the upper band proves to be resistance, and we start to get lower highs at the upper band, then I'll go ahead and cut that runner. If we move through the upper band, why would I get out? Just let it ride. But we'll take the Fed as it comes. As far as the morning trade goes, I'll be interested to see what happens with respect to this move down. The dip buyers should come in just as they came in yesterday, and then we start a fairly steady move up into the number. If it's a down day and we progress down towards the weekly pivot into the Fed announcement and the weekly pivot holds at 49.30, that's potentially a long opportunity down there as well. So stay on your feet. Don't overtrade into the Fed and keep an open mind with respect to the reaction. What we do is we try to find the opening, we try to find the upper and the lower range after the announcement, and then we trade from there. So, but most of all, use stops, control your size, and don't just game the Fed or try to guess what the reaction is going to be. That's usually a recipe for disaster. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. Come trade with us. Come trade with Spring Heel Jack over at channelsandpatterns.com. Come trade the NQs with Tony Rego. We've got live chart and audio, and we'll be doing the Fed thing today. So I hope you'll come and check it out. I'll be back tomorrow morning with another webcast. Trade them well, everybody.